what I always tell people, especially on the first one, if you've never invested in real estate before, like, what are you really going to add by going to walk that property before you close on it, right? Like, you're going to walk through and you're just going to say, "Oh, that looks nice," or "This look," like, you don't even know what you're looking at, right? But if you send a property inspector who does this for a living, completely unbiased because they're getting paid either way, you send a handyman or a general contractor to write up a bid. You have your realtor maybe do a video walkthrough for you and give you their interpretation of the property. How much value are you as a first-time investor really going to add above and beyond what those three professionals have done?
All right, guys, welcome to another episode of the Report Saturday edition. I got my co-host today, my man, Tony Robinson. Tony, welcome to the show.
What's up, brother? Happy to be here, man.
Yeah, excited to be here. Excited to wrap on a really interesting topic because we got the rate environment coming down here. Hopefully soon. There's a lot of rumors out there and noise in the interest rate environment, but we are going to talk about how to buy your first real estate deal in 2024. I think it's a hot topic. I think there's a lot of reason for me to believe, and I think you agree with me, that now's the time to strike. If you're a real estate investor that's been on the sideline and you've been contemplating buying that first deal, I think now is the time to get in before it gets hot.
100%, man. There's a lot of people on the sidelines waiting. And there's also a lot of people who have been like holding on to not wanting to sell their home because they want to get more for it. So there's just a lot of waiting right now. So I think the folks who are jumping in and taking action are going to be the ones that win.
Yeah, and I want to take a step back because I think it's important to remember the rate environment has basically essentially more than doubled, and we've been in a high rate environment for like 2.5 years now. And to think most major markets in the country, yes, there's been some discounts, very slight discounts, but to think that the real estate market hasn't completely collapsed thus far is really a telling sign to how strong the supply demand fundamentals really are. I think from the supply standpoint, a lot of builders slowed down during COVID 2020. They were nervous to build. And then we're seeing a big slowdown in new construction now because of the high rate environment. And also the cost of build, generally speaking, is so much more expensive. And so I've heard different numbers thrown out there, but most articles will say we're anywhere from 5 to 6 million housing units short as a nation to meet the demand that's out there. And I've also heard like Grant Cardone talk about this, Pace Morby talks about this, but this is not including the dilapidated homes in America. There's like 25, 30 million dilapidated homes in America that are not rentable. They're not livable. You can't get bank loans on. So if you account for all those homes, we're really like 30 million housing units short of where the demand is. And then on the demand side, we got the baby boomers that are living longer. They're not moving out of their homes and into retirement homes and selling as early as they once were. They're living longer. And then you got the millennials that are starting families. They're buying their first homes for the first time. And then the Gen Zs, which are even bigger demographic, they're moving out of their parents' house and they're renting apartments and looking for places to live. And so from a household formation standpoint, a demand standpoint, I think there's a big recipe for a lot of growth when the rate environment comes down. And the last thing I'll say is don't forget the Federal Reserve has printed 80% of the money supply in the last 4 years. A lot of that money is off the table right now, is on the sidelines in long-term government bonds and all that sort of thing because of the rate environment. Now, when the rates come down, we're going to see a lot of the money enter the market. I think we're going to see a lot of rent growth. We're going to see a lot of appreciation. We're going to see ADRs go up. And so I think we're going to see a lot of inflation in real estate long term once this all happens. What are your thoughts?
I feel like you kind of hit all the big things, right? It's like there's a lot of talk about like, oh, are we going to see another 2008? But the underlying economics of what's happening today in 2024 are so different than 2008. Like you said, there's way more equity, but that was the issue in 2008 is that people just didn't have enough equity to deal with these adjustable rate mortgages. But now people saw their home values double in 3 years. Like no one's worried about equity right now, right? And then there's a lot of people who are locked into these, sub 3% interest rates that don't want to sell and trade into a 7 or an 8% interest rate, right? So I couldn't agree more, man. I think as rates start to come down, you're going to see a flood of people on both sides, honestly, that both sellers who now want to trade up and the buyers have been waiting for rates to get down to a reasonable level.
Yeah, I totally agree. So let's talk for someone out there listening to this and like, okay, you know what? I'm down. I want to buy a place. I'm ready to finally pull the trigger. What is the first step they should get clear on?
I think the first thing, and I tell this to everybody that I ever meet, you have to know what your goals are as a real estate investor, because depending on what your goals are, that'll dictate what the actual strategy looks like. And there are really 3 reasons, 4 if you want to include short-term rentals, 4 reasons why people invest in real estate. You have the cash flow today, the tax benefits, the long-term appreciation or like equity growth. And then like from a short-term rental perspective, it's like the vacation piece, right? I just want to own a cool vacation home in San Diego. So I think you've got to understand and prioritize those 4 motivations to say what's most important to me because each combination is going to lend itself to a different strategy.
Yeah, I agree. And I also say, like, if you have the ability to go get a primary residence loan, low money down, no money down, you can do FHA 3.5% down. There is a product with Navy Federal Credit Union. I've got a couple of these early on where I got into a no money down loan. They'll finance up to $1 million as a primary residence. Yes, it's for a primary residence, but you don't have to live there forever. You can convert it into a rental property. You can live there for a short amount of time and then convert it over. So don't overlook that. So if you have the ability right now and you have a W-2 job to go get a low money down loan product, I would say that might be the best use to start.
Have you, I might blow your mind right now, Rich. Have you heard of the NACA loan program?
Which one is that?
NACA, so it's Neighborhood Assistance Corporation of America.
Okay.
It's a nonprofit. And I think the majority of their loans they write through Bank of America. But it's a loan product with zero down payment, practically zero closing costs. I think you have to pay for your appraisal, almost nothing else. And their interest rates are typically a point lower than where the rest of the industry is at.
Wow.
It's not income based, right? So even if you make $1 million a year, you can still get a loan through NACA. There are limitations around the purchase price. So you have to buy within a certain percentage of the median home price for your area. So, if the median home price is $500,000, you can't buy a home for $1 million. But if you can qualify, it is one of the best loan products that I've seen, and you can use it for up to 4 units.
Wow. And how does one go about applying for this?
Dude, just look up NACA. I want to say it's just NACA.org. So NACA.org, Neighborhood Assistance Corporation of America. And you have to attend a virtual workshop. And once you attend and complete the virtual workshop, they assign you to a case manager. And so we actually went through this process when we were trying to buy our primary home back in like 2016, I think it was. And dude, it's like a police interrogation with all the questions that they ask you. But the reason why is because NACA actually doesn't approve you on a loan amount, like a typical loan product.
Okay.
They approve you on a monthly payment. So they want to look at all of your cash coming in on a monthly basis, all of your cash going out. And they say, hey, based on the delta that's there, here's a monthly payment that you can afford. And they back into the purchase price from there. So it's a very, very in-depth loan product to get approved for. But once you do, it is one of the best loan products I've seen. And Rich, I interviewed someone who bought a 4-family in the Midwest somewhere. He actually got a check for $13,000 on closing day.
Damn.
Because there was no closing costs and got a credit from the seller.
Wow.
So if you can use the loan product, it's one of the best ways to get started.
Yeah, I love that. That's really good. I did not know that one. So listeners, go check that out. You said NACA.org.
NACA.org.
Okay, there you go. There you go. And if you don't use the NACA product, another creative way, and I think you can do this right now because there's not a lot of buyers in the marketplace, there's not a ton of competition out there right now, is if you want to negotiate the seller to cover your closing costs, one simple way to do it is to land on a agreed on price. Let's just say for simple math, you land on 500 and you know your closing costs are going to be, let's just say 2 points for simple math, which would be $10,000. Be like, okay, you agreed on 500, let's do 510. But I want you to cover 2 points towards my closing costs. And that's a way for you to get in to this deal and have the seller cover your closing costs. Yes, the purchase price is a little bit higher, but you're going to save that money going in and you'll just save that money, keep it in your pocket, and then it'd be a way for you to finance those closing costs over 30 years.
Yeah, we've done that a few times in our portfolio as well. And it's a great way to keep that cash in your pocket. I think there is a limit though, and I think it actually might be 2% of the actual purchase price that the seller can give back as a credit. So work within those guidelines. We've done that a few times as well.
That's another good one. Sometimes repair credits, and it depends on the lender. Like some lenders are going to allow certain things and some lenders aren't, but repair credits is another thing. So like, if you find out, hey, the sewer line needs to be replaced, right? It's going to cost you $15,000. Instead of getting a $15,000 discount on the pricing, ask for the $15,000 in the form of a repair credit. And it's a way for you to have a little bit less money coming out of pocket in order to come up with that repair. And maybe you get the $15,000 credit and you find someone else that can go do it for like half the cost and you get the pocket on that spread. So that's another tip right there. I would say the next thing is go find some lending and get clear on your ability to buy. Get pre-approved and figure out what your ability to buy is, and then you can go out in the marketplace and figure out your search criteria, but get clear on the search criteria from there. So it's like, okay, if you know you can buy an $800,000 property, then okay, go find other $800,000 properties or maybe look at something that's $1 million and under, but no, that's your maximum ability to buy. And then get very clear. Like when you go out and reach out to these brokers, these agents, or even if you go online, like you want it, the more clear you can be on exactly what you want, the more likely you are to find the deal that you're looking for.
I couldn't agree more. I think so many people waste their time going into markets they have no business looking in. So I couldn't agree more on like getting the loan approval amount. But the other piece of that It's how much cash you actually have on hand that you can deploy. And those two things together I call your purchasing power, right? So your loan approval amount, your cash on hand is your actual purchasing power. You need to know what that is because say that like maybe I can get approved for $1 million home, but I've only got $50,000 to invest. It doesn't matter, right? I've got to go find a market that actually aligns with the 50K that I have. So it's looking at both of those things together.
Yeah, absolutely. As a busy real estate investor or entrepreneur, time is money and first impression is everything. Every day to make it easy on myself, I wear Built Basics clothing. Whether you're a girl or guy looking for workout gear, joggers, shirts, button-downs, hats, or shoes, Built's got you covered. Super comfortable, tight in all the right places to make you look fresh and clean all the time. Visit BuiltBasics.com and use promo code SUMMERS20 to receive 20% off of your order. Again, that's BuiltBasics.com. That's BYLT Basics.com. Use promo code SUMMERS20 to receive 20% off of your order. Now back to the show. Okay, so you get the search criteria lined up. You know your ability to buy. You got your pre-approval. And let's just say, hey, this person wants to buy a short-term rental. What's the next step from there?
From a short-term rental perspective, again, I think it goes back to those four motivations I talked about earlier, right? The appreciation, taxes, cash flow, and vacation. But once you've kind of settled, let's say that you want to focus on cash flow. That's your biggest focus right now. And say you've got $100,000 to invest. I take those two things, this goal that I have, the capital that I have, and I need to go find markets that align with that specific goal. I think for a lot of folks who want to buy their first short-term rental, they not get lazy, but they get comfortable and they only choose markets that they're familiar with. And they go based on proximity or where they have family or where they went to school. That doesn't always necessarily mean that's the best place for them to invest. So start with what your motivations are, start with what your buying profile looks like, and find markets that match.
Yeah, I couldn't agree with that more. And then I think from there, you know, even if you're going multifamily side, you're going Airbnb side, I think it's important to obviously buy in a great location. And I like to, like, whenever I get a deal sent my way, I like to do a Google Street View and go around the block and see what you see. Do you see good retail and shopping? Do you see a nice clean neighborhood? Or do you see liquor stores, gun stores, pawn shops, and that sort of thing? And if this is your own market and you do live in a market that's conducive with real estate investing, I think start with your own market because that's where you're going to have the competitive advantage. You don't need to go out of state. But if you do need to go out of state, let's say you don't live in a market that's conducive for real estate investing, then yeah, go out of state. But you gotta know the freaking location, buy in a good location. I think right now, in order for me to do a deal, I need to buy at a good location, and I want to buy something to where I can get a decent deal. So right now, the discounts are out there. Find a deal to where you can get some discounts. Look at your sales comps. You can find comps on like Redfin, Zillow. If you're doing like commercial, if maybe you know someone that has CoStar, you can find some comps there on CoStar, but make sure you're not overpaying. And lean on your real estate agent. These real estate brokers, these agents, they should be able to tell you what the comps are in the market if they're a good agent, so you know that you're not overpaying.
Yeah, I think leaning on the expertise of an agent is exceptionally important, especially if you're going into a market that you don't know. But I think you also have to make sure you're working with the right agent, right? Like the question that I like to ask folks is like, hey, what percentage of your, well, let me take a step back. The mistake that a lot of people make is they say, do you work with real estate investors? And of course they're going to say yes, right? I work with anybody.
They're not going to say no.
Yeah, right. The bigger question is like, hey, what percentage of your clients last year were real estate investors? And if they're like 2%, all right, cool, then you know it's not the right person. It's like, hey, 60 or 70% of my clientele are real estate investors, you know you're working with the right person.
Yeah, that's a good point. Because the ones, and I don't know why this is, but I'm always shocked at what percentage of like real estate agents, they don't know anything about the investing side. They all they talk about is, hey, this property's got some nice curtains and a good ocean view. Talking about the kitchen table, I'm like, yo, like they don't know anything about anything real estate investing, and I'm just always shocked by why that is. Because as a real estate agent, it's like you get to participate in a lot of really cool loopholes that most people don't get to participate in by investing in real estate from a tax standpoint. And so I don't know if the brokers just don't educate these real estate agents. But anyways, that said, I agree with you. Go out there, find the right real estate agent, find the right lender, buy in a good location. So anyway, so you get to closing, you get the deal under contract. Make sure you do your due diligence. I would say always do an inspection. Go through the inspection. I think first time buyer, you're going to see a lot of things on there. Most things probably look scarier than they really are, right? But, you know, if there's something there that's like a major component, so let's say if there's a roofing issue that comes up in the inspection, go have a certified roofer come out to the property and do a more thorough inspection. Have them come up with a proposal for the repairs. Maybe it needs a full replacement. Figure out what those costs are, and if there's any major components that need to be replaced, get those bids, and then go back to the seller and say, hey, these items were not disclosed. I need a seller a repair credit for these items. Otherwise, I'm not going to move forward, and let them come out of pocket for it.
Dude, what we've done a few times is as our inspection is happening, we'll send a handyman or a contractor there at the time of the inspection,
Mm,
and they're just
that's so
following
good.
the inspector around. So as soon as we get the inspection report back, we already have our bid, and then we can submit that back to the seller.
Oh, that's so good. I love that. I haven't heard that one before. Another tip I have is if you're buying an older property, you wouldn't bother doing this with a brand new property, but always get your sewer line scoped during the inspection. It only costs like $400 or $500. But I've bought probably 3 properties with bad sewer lines, and I'm just lucky that we got those sewer lines scoped because some of those sewer lines are not cheap. On low end, it might be 10, 12 grand. On my Scottsdale property, it was like multiple sewer lines, and that thing ended up being like $45,000. And so that's a big mistake right there that you can save just by simply getting sewer lines scoped. And most inspectors will have that option out there. They typically work with other scopers that can do it for you. So that's one tip.
And if I can add one thing
Yeah,
to that
go
too,
ahead.
is the septic. So we live in like the city, right? So most of us are on city plumbing, but if you go into some of these more not remote, but just some of these vacation markets, like they're all on septic. And I didn't even know what septic was because I'd only bought properties that were on city sewer, and I'd only lived in properties that were city sewer. So the very first property we bought on septic ended up backing up while we had a guest there. So they're literally taking a shower, and there's brown water coming up from the bottom of the shower. So now whenever we buy a house that's on septic, we always do a septic inspection as well.
Yeah, that's a really good one right there. Okay, so now you get past the due diligence period, remove contingencies, and now really it's just a matter of like getting the lending lined up and sending your money in to close, signing the loan docs, and then you close. And I think there's a lot of like, what if this and what if that, and you feel like you need to have everything figured out. Even your property management, who's going to manage the property, what's the plan? Maybe you're doing a renovation, but it's like, this is the first one. Like I think that it's the takeaway for me really is like, yes, it's going to feel overwhelming. It's never going to feel right. And like, just go out there and close and make it happen. You can worry about all this other stuff post close. And, if you hire the wrong property manager, it's okay. Like you can pivot and you can bring out another management team. I've done that many times, and there's going to be mistakes out there. There's going to be things that come up that it's never going to be perfect. And you just don't know what you don't know. So I say, just close. It's never going to feel super comfortable. It's going to feel uncomfortable, but you just got to do it.
What do you think about people buying sight unseen for that first short term or long term, that first real estate investment?
Dude, I got to be honest. My first deal was an 11-unit property in Cincinnati that I still own today, and I bought it sight unseen.
And why did you feel comfortable doing that?
I felt comfortable doing it because, one, I did a lot of research on the area, and I really leveraged my broker, the listing broker, and actually, fun fact, that listing broker that sold me that deal sold me another deal in Cincinnati, and I was now an investor in our fund. So it kind of all goes full circle. But anyways, shout out to JD Schmergy, by the way. His name is JD. But I felt comfortable because I leveraged that person and also the property manager with that deal. I trusted them, right? And also like it was my own money. It wasn't investor capital. And so like I was like just comfortable with it. And I also did a lot of research on the comps, and I felt like I was buying at a good price point.
What I always tell people, especially on the first one, if you've never invested in real estate before, like what are you really going to add by going to walk that property before you close on it, right? Like you're going to walk through and you're just going to say, oh, that looks nice, or this look like you don't even know what you're looking at, right? But if you send a property inspector who does this for a living, completely unbiased because they're getting paid either way, you send a handyman or a general contractor to write up a bid. You have your realtor maybe do a video walkthrough for you and give you their interpretation of the property. How much value are you as a first-time investor really going to add above and beyond what those 3 professionals have done?
Dude, that's such a good point, man. That's such a good point. And like for context, for listeners out there, when I bought that 11 unit, I was scared at the time. People told me not to buy it. They told me not to invest out of state. And guess what? I bought it. I hired the wrong property manager. I made all the mistakes. 2 or 3 tenants moved out like right after close. Yeah, I made all the mistakes, but guess what? Bought that property, and now 5 years later, I still own it. I did a cash out refi a couple years later. I burned all my money out of it and then some. And that thing has more than doubled in value over the last 5 years. And so the takeaway is like, you can make all the mistakes, but if you buy in good locations, you buy at a decent price, and you just take action and have a long-term mindset and outlook going in, yes, there's inflation, and yes, rents go up over time, and yes, these assets really do appreciate and the game really works. Good things will happen. You just got to be patient and trust the process.
Yeah, dude. There's a saying called patient capital, and I heard it was attributed to Jeff Bezos first. I don't know if it maybe came from someone else, but He said the part of the reason he's been so successful is because he has a longer time horizon for getting a return on his capital. And he's able to beat people because they need a return in 12 months, but he can wait 36 months, right? Or 5 years to get his return. And when you can make those long-term decisions, you tend to win out pretty big in the long run.
Yeah, absolutely. So I think the takeaway looking back for listeners out there is like, okay, there's rumors out there, the rate environment, it's going to start coming down. The Fed's not going to wait for inflation to completely hit 2%. We might see the rate cuts, we might not. But I think now is the window to go out there and strike. The deals are out there. I see the discounts. And if you're out there waiting, you could run the risk of waiting too long. And before you know it, the news is going to turn around. There's going to be good news in the marketplace. We're going to see a lot of buyers out there. And it's going to be much more challenging to go out there and find that discount. You can also always refi down the road into a cheaper rate. And the last thing I'll say is when you get your loan product right now, try to negotiate something without a prepayment penalty or a very low prepayment penalty. So when the rates go back down a year from now, 2 years from now, you can refi without that prepayment penalty.
Yeah, dude, I feel like you hit it all, man. It's going through those steps. It's focusing on taking action and not waiting for that perfect time to get started.
Yeah, I love it. Yeah, go out there, make it happen. I think this concludes this episode of the Saturday edition. He's Tony J. Robinson. I'm Rich Summers. Listeners, thanks for tuning in. We'll see you in the next one. Peace.